Short-lived on Wall Street. That's our top story today on the Wall Report. I'm your host, Greta Wall. The major indices are all sharply lower today, wiping out all of Wednesday's gains. This comes after the Fed approved its largest rate hike in more than 20 years. The central bank raised the federal funds rate by 0.5% as expected on Wednesday. That was the largest rate hike since 2000. The Federal Open Market Committee also voted to begin the balance sheet reduction in June. Starting June 1st, $30 billion in Treasury securities and $17.5 billion in mortgage-backed securities will be rolled off the balance sheet per month. That pace will then increase to $60 billion in Treasury securities and $35 billion in mortgage-backed securities after 3 months. Fed Chair Jerome Powell said more 50 basis point rate hikes are on the table for the future, but he shut down the market's expectation for larger hikes. Powell said, quote, 75 basis points is not something the committee is actively considering. Powell said the Fed believes the American economy is very strong and well positioned to handle tighter monetary policy, and they are hopeful they'll be able to achieve a soft or softish landing. Now, taking a look at the economic data of the day, new labor market data is underlining the inflation surge for employers in the U.S. Worker productivity plunged in the first quarter while labor costs soared. The Bureau of Labor Statistics reporting productivity tumbled 7.5% in Q1. And that's the largest decline since the third quarter of 1947. At the same time, unit labor costs soared 11.6%. That brings the gain over the past 4 quarters to 7.2%, the largest since Q3 of 1982. Economists were expecting productivity to fall just 5.2% and costs to rise 10.5%. Now, weekly jobless claims also rose more than expected. The Labor Department reporting 200,000 Americans filed initial claims for unemployment benefits last week. That was an increase of 19,000 from the previous week and higher than economist expectations for 182,000. Continuing jobless claims, meantime, fell by 24,000 to 1.38 million in the week ending April 23rd. Now, in the energy market, oil prices are up today on supply concerns after the EU laid out its plans to phase out Russian oil imports this year. West Texas Intermediate crude futures up about 4%, or 0.4%, not 4%, 0.4% to over $108 per barrel, while Brent crude futures are rising about 0.8% to $111 per barrel. OPEC Plus also met today, sticking to its planned modest increase in production, even amid uncertainty over supply in the market. The group will increase production by just 432,000 barrels per day in June. And meantime, the U.S. Energy Information Administration did report fuel inventories rose by 1.2 million barrels last week. That increase came as the U.S., though, released more from its strategic reserve. Now, it's another busy day of earnings. Oil giant Shell's shares are flat today, despite reporting its largest quarterly profit since 2008 in Q1. The company did report an adjusted profit of $9.1 billion, or $1.20 per share. Now, that beat analyst expectations as commodity prices soared in the quarter. Shell said it did take a $3.9 billion post-tax charge related to pulling its business out of Russia. The company did increase its dividend for the quarter by about 4% to 25 cents per share, and $4 billion of its $8.5 billion share buyback program is now complete, with the company saying the remaining $4.5 billion will be done before Shell announces earnings for the second quarter. Now, Nikola shares are jumping today after reporting it did start production in the first quarter. The electric truck maker reporting an adjusted loss of just 21 cents per share on $1.9 million in revenue. Now, that was a smaller loss than analysts were expecting and sharply higher than revenue estimates. Nikola said production on its Tre semi-truck started in late March, and it delivered the first 11 of those trucks to customers in April. The company now has more than 500 purchase orders and letters of intent for those trucks this year. Nikola maintained its previous guidance to deliver between 300 and 500 of the trucks in 2022. Shopify shares, meantime, are plunging more than 17% after missing Q1 expectations. The e-commerce company reported adjusted earnings of 20 cents per share on $1.2 billion in revenue. Now, that missed analyst expectations on both the top and bottom line. Shopify did also announce plans to spend $2.1 billion to acquire fulfillment technology provider Deliver. That deal will be 80% cash and 20% Class A subordinate voting shares of Shopify. Now, Sunrun shares are up today after reporting stronger than expected Q1 sales. The solar company reported a loss of 42 cents per share on $495.8 million in revenue. That was steeper than analyst expectations for a 17 cents per share loss, but better than estimates for revenue. Sunrun's customer orders jumped 39% year over year as demand rose for solar due to surging utility costs across the U.S. The company did add more than 29,000 new customers in Q1, up 20% compared to a year ago, bringing the total to roughly 690,000. Sunrun also said it implemented meaningful price increases during the quarter to offset higher costs. The company did hike its guidance, expecting installed solar capacity growth of 25% or more this year. That's up from previous guidance for growth of 20%. Now, eBay shares are sliding today after beating expectations but cutting its full-year outlook. The online retail company reported adjusted earnings of $1.05 per share on $2.48 billion in revenue. Now, that was in line with eBay's previous guidance and did beat analyst expectations on the top and bottom line. Annual active buyers fell to 142 million in the quarter. Now, eBay lowered its full-year guidance, forecasting earnings between $3.90 to $4.10 per share and $9.6 billion to $9.9 billion in revenue. Now, Etsy shares are also tumbling today about 14% on a weak forecast. The company reported Q1 earnings of 60 cents per share on $579.3 million in revenue. That topped analyst expectations on the top and bottom line. But Etsy's Q2 forecast was weak, with the company citing high inflation as a top issue. Etsy expects revenue to fall to between $540 million and $590 million this quarter versus analyst expectations for $627 million. Now, Twitter shares are up today nearly 4% after Elon Musk secured more funding for his $44 billion takeover of the company. A new SEC filing shows Musk has secured $7.14 billion in total. $1 billion of that comes from Oracle co-founder Larry Ellison, making him the biggest backer of the deal so far. A venture capital firm Sequoia is contributing $800 million, and crypto exchange Binance committed $500 million. The new funding will allow Musk to cut the margin loan against his Tesla stock in half to $6.25 billion. But meantime, Tesla shares are down more than 6% today on reports that Musk will serve as Twitter's temporary CEO after buying the company. CNBC first reported that he plans to spend a few months in that role, citing unnamed sources. Tesla stock has been volatile since Twitter accepted Musk's offer, as shareholders fear his takeover will distract him from operations at Tesla. And now the market has its eyes on Friday, with the April jobs report set to be released at 8:30 a.m. Eastern. That's expected to show the U.S. economy added 400,000 jobs last month, with the unemployment rate slipping to 3.5%. But the private jobs report did come in short on Wednesday. So let me know your predictions in the comments for tomorrow's report. And be sure to subscribe to my Coffee with Greta newsletter to get the details ahead of the market open. Give this video a like and hit that subscribe button.